and welcome back to Financial Podcast with Olivia. If you're finding these market insights helpful, please take a moment to like this video and subscribe to the channel so you don't miss our future episodes. Today, we are diving deep into the crypto markets because it has been an absolutely wild week, highlighted by some truly historic moments for Bitcoin. Get ready because there's a lot to unpack. Just recently, we saw Bitcoin make a significant move, hitting a new all-time high. One source noted it broke past its previous best of 108.8K USD. Another reported a new all-time high of $109,400 on May 21, rising over 26% in the past month. We even saw reports of Bitcoin surging past $111,000 and hitting a new high of $109,458 on Binance on May 21. This record-breaking rally pushed its market capitalization to $2.21 trillion. It's been a rapid ascent, especially considering its previous all-time high was just over $109,000 back in January. One report from May 21 mentioned Bitcoin pushing toward its all-time high after breaking past 100K and then consolidating. The price movements were swift. For instance, on May 22nd, Bitcoin recorded a sharp increase from $68,500 to $71,200 within a 6-hour window, a 3.9% gain as reported by CoinGecko data. Later that day, it broke through the $70,000 resistance level at 2 p.m. UTC, with trading volumes spiking by 35%. So what is driving this powerful rally? The sources point to a few key factors aligning. We are seeing a surge in institutional inflows into spot Bitcoin ETFs. One source noted that spot Bitcoin ETFs had attracted $2.2 billion in inflows over the past 10 trading sessions. Another highlighted nearly $3 billion USD of inflows just in May so far, bringing total assets held by providers to over $120 billion USD. Institutional interest is further evidenced by a $1.05 billion inflow into Bitcoin ETFs during the week of May 17, 2025, as noted by CoinShares. Beyond institutional money, there are macroeconomic tailwinds at play. The sources mentioned a de-escalation in the U.S.-China trade war, specifically a 90-day trade agreement announced on May 12, which eased economic uncertainty and market jitters. Interest rates staying put and inflation data starting to settle were also cited. Analysts suggest that global liquidity, the amount of money available in the global economy, which the Bitcoin price closely mirrors, is forecast to increase throughout the year. Some see this easing of geopolitical tensions not as triggering capital flight, but unlocking a risk-on rotation, with capital moving into BTC and high-beta tech assets. There is also a strong correlation with traditional financial markets. The stock market strength, like the S&P 500 gaining 1.2% to close at 5,320 points on May 21, 25, often correlates with increased risk appetite among investors, pushing capital into high-risk assets like cryptocurrencies. The Nasdaq was also up 1.5% to 16,920 points on May 21. We even saw crypto-related stocks like Coinbase gaining alongside Bitcoin's rally. Coinbase's inclusion in the S&P 500 was highlighted as a big win, showing the growing intersection of TradFi and crypto. Now, what does this mean for altcoins? As Miles Deutscher pointed out, recent BTC price pumps have a positive correlation with altcoin market performance. Historical charts show altcoins often rally alongside strong Bitcoin movements, making BTC uptrends a key signal for altcoin trading strategies. We've seen this play out recently. When Bitcoin's price broke $70,000 on May 22nd, Ethereum gained 2.8% to $3,850, and Solana rose 4.1% to $178 within the same 24-hour period. Another source noted that Bitcoin's bullish run lifted other cryptocurrencies, with Ethereum rising 2% within an hour to trade at $2,645, and XRP following with a 0.5% gain to $241. The correlation between BTC and altcoins remains strong, with coefficients like 0.87 for ETH/BTC and 0.79 for SOL/BTC over the past 30 days. Traders can capitalize on this by targeting altcoins with high beta to BTC, meaning they tend to amplify Bitcoin's movements. However, it's crucial to remember the risk. A sudden BTC pullback could drag altcoins down faster due to their higher volatility. Interestingly, this recent surge coincided with a specific date, May 22nd, known as Bitcoin Pizza Day. This day celebrates the first real-world Bitcoin transaction back in 2010, when a programmer exchanged 10,000 BTC for 2 pizzas. At the time, those coins were worth just $41. Today, that same amount is worth over $1 billion. Bitcoin Pizza Day has become a symbol of possibility and a reminder of Bitcoin's journey from internet forums to a global financial phenomenon. Coinciding with this year's Pizza Day, Bitcoin's price surging past $111,000 really drove that point home. From a trading perspective, this environment presents actionable opportunities but also requires caution. Monitoring BTC's momentum can help identify optimal entry points for altcoin trades. Technical indicators like the Relative Strength Index, or RSI, and Moving Average Convergence Divergence, or MACD, can provide insights. On May 22nd, Bitcoin's RSI on the 4-hour chart was at 68, indicating overbought but not extreme conditions, and the MACD showed a bullish crossover. Some altcoins, like SOL, had RSIs hitting 70, suggesting stronger short-term upside potential. On-chain metrics also show retail accumulation, with a 12% increase in BTC wallet addresses holding over 0.1 BTC since May 20, reflecting retail accumulation. Trading volumes for altcoins like ETH and SOL also spiked. Given these movements, what are analysts predicting? Some analysts are revising their price predictions for 2025. While caution is always advised due to volatility, some forecasts are becoming increasingly bullish. One analyst predicted a price above $175,000 is increasingly within reach if current conditions hold and regulatory clarity emerges. Other analysts expect BTC to reach between $135,000 to $320,000 in 2025. One target at the 1.618 Fibonacci level aligns at $135,000 to $140,000. Another analyst pointed to a breakout from a 4-year bullish megaphone pattern, supporting a bullish case for another 170 to 190% rally, setting a much higher price level between $300,000 and $320,000. Jamie Coutts predicted the increasing money supply might push Bitcoin's price above $132,000 before the end of the year. However, it's essential to manage risk. Markets edging toward euphoria can create traps, and Bitcoin heat maps show price movement toward high leverage zones that may trigger liquidations. Analysts use various indicators to spot potential market tops, including the MVRV Z-score, Pi cycle top indicator, trade volume trends, Puel multiple, and exchange inflows. Historically, lower trading volumes during price increases can be a warning sign, signaling weakening momentum. Some analysts even use a 15% rule, observing that a wall of sell orders often appears around 15% below the all-time high, potentially marking an institutional exit point. Looking at the bigger picture, Bitcoin is increasingly seen as a high-conviction risk asset in periods of macro stability. Its dominance index was at 54.3% as of May 22nd. Beyond price, the global perception of digital assets is fundamentally evolving. Countries like El Salvador have adopted Bitcoin as legal tender, and top firms are increasing their exposure. India also continues to rank high in global crypto adoption indexes, with growing grassroots engagement and systematic investing becoming more popular, signaling a growing conviction in crypto as a long-term asset class. This confluence of factors, institutional inflows, macroeconomic improvements, strong market correlations, and evolving perception, has undeniably propelled Bitcoin to these new heights and is impacting the broader altcoin market. It's a pivotal moment, and understanding these dynamics is crucial for navigating the current crypto landscape. That wraps up our dive into the recent crypto market surge. Remember to always do your own research and manage your risk carefully. Thank you for joining me on Financial Podcast. If you haven't already, please consider liking this video and subscribing to the channel for more financial insights. We'll be back next time with more analysis.